In a dramatic turn of events, global stock markets suffered a major collapse after former U.S. President Donald Trump announced sweeping tariffs on imports, sending shockwaves across financial institutions and economies worldwide. The unprecedented move, which includes a universal 10% tariff on all imports and significantly higher rates for select countries, triggered an immediate sell-off, wiping out trillions in market value and raising concerns of a looming global recession. Stock markets plummet. The U.S. markets bore the brunt of the impact, with the Dow Jones Industrial Average plunging by 1,412 points, 3.3%, marking one of the worst trading days in recent history. The S&P 500 followed with a 4% decline, while the Nasdaq Composite tumbled 5.1%, weighed down by tech giants with significant reliance on global supply chains. Apple, Microsoft, and Tesla saw their stock values nosedive as investors reacted to the economic uncertainty posed by these aggressive tariffs. Asian and European markets mirrored the panic, with the Nikkei in Japan falling by 3.8%, the Hang Seng in Hong Kong dropping by 4.2%, and the FTSE 100 in London losing 2.9%. Emerging markets, heavily reliant on exports to the U.S., suffered even deeper losses, as investors rushed to pull their money from stocks, fearing a protracted economic downturn. The tariff breakdown and global response. Trump's new tariffs have introduced a 54% levy on Chinese imports, a 24% tariff on Japanese goods, and up to 20% on products from the European Union. The move, justified by Trump's administration as a means to protect American jobs and industries, has been met with fierce criticism from international leaders. European Union officials called the tariffs an act of economic aggression and hinted at retaliatory measures. China, which has already been locked in trade disputes with the U.S. in the past, warned of serious consequences for the global economy and vowed to take countermeasures. Japan and South Korea expressed deep concerns over the disruption of global trade, with Japanese Prime Minister Fumio Kishida stating that such measures could destabilize international economic cooperation. Industries in crisis. Industries that heavily depend on international trade were hit hardest. The technology sector saw immediate damage, as companies like Apple, which relies on Chinese and Southeast Asian manufacturers, faced higher costs and supply chain disruptions. The fashion industry, which sources a large portion of its materials and production from countries like Vietnam, China, and Bangladesh, also suffered from the fallout. Automobile manufacturers, including Toyota and BMW, issued warnings about increased production costs, which could lead to job losses and reduced consumer demand. The agricultural sector in the U.S. also faces risks, as retaliatory tariffs from other nations could harm American farmers who depend on export to China and Europe. Economic experts warn of global recession. Economists and financial experts have sounded the alarm, warning that these protectionist measures could trigger stagflation, a combination of slow economic growth and rising inflation. Former Federal Reserve Chair Janet Yellen described the move as an unnecessary shock to a recovering economy, emphasizing that it could derail global financial stability. Investors are scrambling to reassess their portfolios, said Mark Sandy, chief economist at Moody's Analytics. These tariffs could push the U.S. and other major economies into a period of stagnation, wiping out gains made in the post-pandemic recovery. Uncertain future for markets and trade. As global markets continue to react, uncertainty looms large over what comes next. Will the U.S. and its trading partners negotiate a resolution, or will this escalate into a full-blown trade war with long-term consequences? With leaders around the world preparing for economic countermeasures, investors remain on edge, bracing for what could be one of the most volatile financial periods in recent history. For now, the only certainty is uncertainty, and the world watches closely as markets and policymakers struggle to navigate this turbulent landscape.